Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Off from the day's high for the markets. One, of course, we're awaiting the policy decision at 2:30 p.m. today. The expectation is that there could be a rate hike. But apart from that, the SkyMed, which is the private forecasting weather agency, has revised its projection for the full year monsoon lower. So they're now projecting monsoon to be at 92% of the full year average versus 100%. IMD forecast, of course, or from the Met, will come out later today. Manisha joins in with complete updates. Manisha?
Thank you so much for that, Reema. Well, yes, it's coming at a time when we already have seen the monsoon really not perform so well. So while the first month, that is June, closed with 5% of deficiency, we saw July actually following suit with 6% below normal monsoons. July actually was expected to perform at around 101% as per the IMD's forecast, but we've seen 94% of monsoon there. So it clearly has been lower than the estimates, and of course just about lower from the normal as well. And we have seen quite a bit of a decline in the estimates coming from SkyMet as well. Remember, their overall estimate for the monsoon was at 100%. That has been revised down to 92% now. And the expectation is that IMD, when it comes with its latest release today, will also see a downgrade in sense of a release here. As of now, IMD stands pat at 97% of an LPA. Their expectation is that for the month of August, we might be looking at monsoons at 94%, which already has been revised lower by SkyMet at 88%. So not very good news really when it comes to monsoons, because remember, we started this monsoons with an expectation that it would be a third straight year of normal monsoons coming in. But with the kind of couple of months we already have put in sense of monsoons are not so great. And the month of August, which contributes 30% of an overall rainfall, is expected to look at a slower monsoon as well. Another concern that we are picking up from the Indian forecasters and international forecasters also is that there is a possibility, a 75% possibility of an El Nino here. So that, of course, can be a bit of a concern. August is not expected to be good, and so is September. So clearly no good news coming in from that front.
Okay, all right, Manisha, thanks so much for that. Well, we have Mahindra & Mahindra's total auto sales. They are flashing for you on the screen. They're up by close to around 13% on a year-on-year basis. And the total tractor sales, that's up by nearly around 20% on a year-on-year basis. So those numbers look very decent, I think. So let's, okay, all right, we have the absolute number as well, 22,679 odd. So that's quite a healthy growth actually on a year-on-year basis. The domestic tractor sales as well, looking pretty good at around 21,500 odd. I think it's more or less on expected lines. We're expecting a good growth out there. And in fact, that's precisely what the number has come in at.
Let me just read out what the president of the automotive sector at M&M has said. The auto industry has been subject to certain uncertainties with the trucker strike and sluggishness on the retail front, which has impacted the passenger vehicle segment. Demand for our commercial vehicles continues to be strong, and the newly launched Furo range of ICVs augurs well for the MHCV business. As we move into the festive season, we are confident of seeing a turnaround in the overall buying sentiment, coupled with the just announced Mahindra Marazzo, which is scheduled for launch next month. So optimistic commentary going into the festive season as well.
Actually, you know, I'm just looking at a couple of estimates, and the tractor sales that were expected were closer towards 25,000 odd for the month of July. So I think the reading is at around 22,000 to 23,000. That could be a tad lower than what, you know, I'm looking at a Motilal Oswal expectation. I think even Sonia shot out a Nomura expectation out there. That as well was expecting a growth of more than 30%. So the tractor sales growth at around 20%, well, looks like expectations were quite elevated. It'll be interesting to see, pull up the intraday chart of the stock. At first sight, the 20% looked good, but in comparison to the couple of you know, expectations that we got, it appears that the street was working with more than a 30% growth in terms of the tractor sales numbers. But let's tell you, how do you trade the Nifty from here? Ashwini Gujral and Sandeep Barclay join us. Ashwini, coming across to you, we're more or less flattish. You were telling us in the morning you're looking to buy both the Nifty as well as the Nifty Bank. That holds?
See, the sense is that, you know, there are other events which are now coming in, like, you know, deficient monsoon and trade war, etc., etc. So maybe somewhere, you know, RBI may not be the only situation here. So a good idea also is for people who want to keep away from volatility is to take things off. Sometimes it happens, even a favorable RBI will only lead you into a consolidation, because the market is sitting at record levels, strong rally. I mean, it's tough to please a market like that. So we are intraday on the short side, but even taking things off and letting the market consolidate, maybe correct a bit, closer to say 11,250, 270, bank nifty couple of 100 points. That may be a better situation to buy. Otherwise, this choppiness with one good news, one bad news is likely to continue. Individual stocks, Maruti has probably confirmed some sort of downside. This is a sell with a stop of 93.50, target of 9200. Yes Bank again, sell with a stop of 368, target of 354. And Godrej Property is a buy with a stop of 736, target of 760.
Okay, let's get in a few more trading ideas from Sandeep Wagle. Sandeep, your recommendations?
I would go with a buy in a KPIT, stop loss of 302, target 315, and a sell in a DHFL, stop loss of 598, target 578.
Okay, all right. Thanks so much for that, Ashwini, as well as Sandeep, for joining in and giving us those trading strategies. Well, we are as flat as can be, but let's turn our attention to the European markets. They have just opened up. Let's see how they have done, for starters at least. Remember, overnight, we had more or less a flattish finish, but the FTSE was a relative outperformer. We had the CAC that ended with a gain of around 20 points odd. For starters, the FTSE is giving back, it's more or less flattish. The FTSE as well as the CAC as flat as can be, just to kickstart trade. But I think on that note, we'll slip into a short break. You come back, we'll get chatting with the management of Tejas Networks. Stay with us. Well, keep an eye out on Coal India. That stock's doing well. It's bounced off those lows. It's up close to around 2.5% in an otherwise flat market. Volumes as well spiking up there. So just keep an eye out on that stock. But as promised, Tejas Networks, that's the stock in focus after Algeria's Ecosnot. That in fact, selects them as global productivity connectivity partners. We have Mr. Sanjay Nayak, the MD and CEO of the company, who joins us. Hi, Mr. Nayak. Thanks so much, sir, for joining in. If you could give us some details on this particular order and this tie-up you've done with this Algerian company. Fill us in. What's the scope of business? What's the order size?
Thank you, first of all. Happy to join in. What we have got from Algeria's Icosnet is essentially a rate contract where, as they expand their network within Algeria and other point of presence around the world, we should be able to get continued business from them. So in that sense, there's no specific value that we can associate with the order because it's a rate contract and a long-term relationship, and as they continue to expand, we'll get that. The second part, which I think is more important, is that if you remember, we've been talking about expanding our international presence. So many of these kind of wins become excellent reference wins for us in the different geographies. So in the Northern African region, for example, this is a great win, and we expect that many more customers would continue to start looking at us much more seriously than they have looked in the past.
Okay. Sanjay, good afternoon. So if you could break up the domestic and export ratio for the company in Q1, and what was the growth rate in the India business as well as for your international business?
You see, last financial year when we closed in March, around 82% of our business was India and around 18% was international. Okay. This year, as the quarter is going by, we have Q1 and I think the remaining 3 quarters are there. We expect international to be around 25 to 30% of the total. So if you actually just do the math, international should be growing at a very significant pace compared to India. But within the quarter, of course, we have seasonality where, because of a certain kind of order, one or the other may happen. But on a directional basis, we believe that the international would pretty much, nearly double from the current levels.
All right. And Mr. Nayak, the Q1 numbers have started off on a good note. We have good revenue growth and margins as well at around 25-26% odd. What kind of a guidance can you give, our viewers for this year?
Yeah, so first of all, the robustness of our business based on the data growth and everything else is very, very solid. So we have a medium-term guidance of 20% year-on-year growth. And this year in particular, we see faster than 20% year-on-year growth on the top line. On the margin side, we believe that around 14 to 15% PAT as a steady state is what we will do. I know we did much better than that in Q1, but that was, again, I would say because of certain orders which are higher margins. But on an annualized basis, we see around 14 to 50% on PAT and more than 20% year-on-year revenue growth for this current fiscal year.
Okay, all that is fine, but your balance sheet was a bit of a problem in the quarter gone by. Your working capital increased to 359 crore versus 323 crore on a quarter-on-quarter basis. Your DSO, or days sales outstanding, increased to 167 days versus 135 days sequentially. What was the key reason for that? And do you expect an improvement in the coming quarters? And if yes, to how much? Any guidance?
Yeah. So actually speaking, if you see directionally over the last 4 quarters, and we had talked about it, that we are continuing to improve. Our working capital, actually, we are at around 145 days of working capital. We were at 141 days by end of March, so I think it's just a small seasonality during the Q1. We believe that 130 to 140 day working capital cycle is what we're going to be steady state. We have been able to stretch out our payables based on the credits we are getting from suppliers. And DSO, I think maybe 1 or 2 accounts just slipped out from Q1 to Q2. But as I said, steady state, we do expect working capital to come down from current 145 days to 130 to 140 days over the next couple of quarters itself. So I don't see any challenges in that. This is something which we've been able to control quite well in the past, if you really look at our trend line for the last 4 quarters or so.
Okay, you're telling us about the challenges and you're clarifying on those aspects. So let's talk about the opportunities. What about defense? There was supposed to be an opportunity out there. Could you tell us the size of the business out there? Do you already cater to defense?
Yes, we do cater to defense, except that we work behind certain system integration partners,
okay,
and some of whom would have bagged certain defense contracts. We should be getting orders from them as well. So that's, I think, on the defense side, where there are only a few projects of larger kind in Indian defense which have currently been put under the execution mode, and we should be getting some piece of it. BharatNet, of course, you know about it. The phase 2 is on now, and we are, again, many of our system integration partners have been declared L1, so we should be getting some business out of that in the couple of quarters, this quarter and next quarter as well. So I think overall the India government spending, I would say, continues to be pretty robust. The private guys in India, if you see from an overall angle, and you would have been tracking that, the next big investment is going to be taking broadband to the homes of people on fiber to the home technologies. And again, we seem to have a very good role to play there, and we expect that some of the wins with that product line should also give us more boost in the private sector as well.
Okay, we'll leave it at that, Sanjay. Thank you very much for joining in. Tata Global Beverages consolidated net profit has come down on a year-on-year basis by 6.6% to 116 crore. There is a revenue growth of 5.8% to 1800 crore rupees. I'm comparing it with the Kotak estimate. So revenues appear to be in line, but at least on the profit front, it appears to be lower than the one estimate that we had from Kotak. So Kotak estimated the profit to come in at close to 200 crores. Compared to that, the company has reported a revenue figure of only 116 crore. EBITDA has come in at 31.2. I think it must be 312 crore and not 31.2. So we'll just wait for the EBITDA to get flashed. I guess it would be 312 crore. 312 crore, and margins would be at 17% rather than at 1.7%. I guess that would be a bit of an error, so we'll just try and get that. But it appears that on the revenues in line, but at least in terms of the profitability, it looks to be a bit of a miss.
I think we'll have to wait for this profitability number, because if your revenues are in line and the net profit is missing by such a large margin, then the EBITDA number becomes very, very important. So we're trying to open that on the BSE. It's not yet been uploaded. So I'm just trying to pull out that number, but our ticker team as well will get that number for you. In terms of the estimate that Rima was talking about, the estimate was for around a 325 crore EBITDA number. So let's see what they've come in at. For the time being, the stock has taken a bit of a knock, primarily because the net profit number is much, much lower than what we're working with. The top line growth, in fact, Kotak was estimating around a 6%, and that's more or less in line. So we'll wait for that number. Actually, for the time being on the BSE, we've not yet got that release, trying to pull out those numbers from the wires as we speak. Okay, all right. I think we're not yet getting those numbers. So let's do one thing. Let's slip into a short break. You come back. Hopefully, we'll have those numbers with us. Welcome back. Then we're waiting by. Okay, all right. We have got those numbers finally up for you. Tata Global Beverages. The numbers should be up for you on the screen. I think it's come in. EBITDA number is at around 249 crores. Yeah, that's precisely the number, 249 crores. So that is much lower than what the street was working with. In fact, Kotak's estimates were expecting a number of around 325 crores. So these numbers go down as a bit of a disappointment. Yep, I've just calculated and tallied that number as well. 250 crores is the number you should be working at. That would mean that in fact there's a bit of a margin compression in comparison to an expansion that Kodak's estimates did throw up, and that explains why the stock has moved to the low point of the day.
Just some more details. There is an exceptional loss this time around, and that is on account of redundancy costs related to internal restructuring. So there is an exceptional loss of, I think, what, 18 crore, which has impacted them this time around. Also, the company has indicated that revenue from the branded business increased by 7%, and after excluding the impact of business restructuring and on a constant currency basis, the increase is close to about 8%. The reported revenue from operations grew by 6%, and that's because of lower sales from the non-branded business. So it's the non-branded business which has been a drag for the company, while the branded business has done well. And if you look at the vertical breakup, tea has seen about a 5.5% increase year on year, while coffee has been driving growth, and that has gone up by close to about 16.4%. The stock is still under pressure, revenues in line, margins miss, and bottom line impacted by an exceptional loss as well as lower margins. So that too is lower than the market expectations. Okay, all right. The stock is low as we speak, but let's move on. All eyes will be on the Reserve Bank of India as it will announce the monetary policy decision later today. CNBCTV18 had conducted a survey amongst economists on what they expect from the RBI. Ritu Singh joins us with all those details. Ritu.
You know, in the June policy, it was a fairly unanimous decision to hike interest rates by 25 basis points. But this time around, it will be a very close call. In fact, 60% of our respondents believe that there will be 125 basis point hike, but 40% believe that the RBI could leave the repo rate unchanged at 6.25%. Well, those that have voted in favor of the hike say the fact that core inflation is much above RBI's comfort range. Also the fact that the government has announced the minimum support price, which is, a very steep hike, that could actually play a role into the Reserve Bank of India hiking rates if it sees fit. But the other, party that believes that there will be a status quo say that, the inflation reading is actually below what the street was expecting. Monsoons have been normal, and even crude prices haven't really risen since the last policy, which is why there could be a status hike. But a hike there will be in this calendar year. 90% believe, whether it comes in August or sometime later this year, there will be one rate hike by the Reserve Bank of India. In fact, we also asked our respondents if they see any changes to the statutory liquidity ratio, but 100% believe that that will be left unchanged on, in this policy. On the macro parameters, however, they were fairly confident that, the GDP forecast is likely to be left unchanged at 7.4% for this fiscal, and the CPI forecast for the first half of this year, which has been set at 4.8 to 4.9%, will also be left unchanged. But for the second half of this year, where, RBI has projected 4.7%, it's possible that there could be some marginal changes to that because of the impact of the minimum support price on inflation, how that feeds into it. We also asked them if they expect any change in the stance of, the policy, but they were fairly, in fact, 100% said that no, it'll remain neutral. There will not be any change in the stance. But the tone of the policy, that is something that many believe will be similar to the last one, or could even be hawkish, acknowledging the fact that there are risks to inflation.
Okay, thank you, Ritu, for that. So it appears the economists are a bit divided, but the bias could be towards a rate hike. 60% believe there is a possibility of a rate hike. But back to talking about earnings, Emami is under pressure in trade after posting a muted set of Q1 numbers. The revenue, EBITDA, as well as net profit has missed street expectations. Mangalam joins in with the key highlights from this quarter. Mangalam, the performance is just even more stark when you compare it to Dabur less than 24 hours ago.
Absolutely, Rima. So that is why we see this adverse reaction on the stock. However, if you just take a look at the internals, the company just uploaded their presentations. The internals are not as bad as, the optical numbers that we saw, the reported numbers were. The adverse reaction on the stock has come on account of two reasons, I would believe. The first one is that going into numbers, last 2 weeks, the stock was up around 13.5%. And secondly, like you mentioned, stark underperformance as compared to Dabur. That said, the revenue at 614 crores below expectations, as is EBITDA and net profit too. Volume growth at 16%, in line with what the range that the street was working with, 15 to 18%. However, if you take a look at it in account of the fact that, or in cognizance of the fact that, in the base quarter there was a decline of 18%, it looks like the 2-year CAGR has been flat to negative, which compares to the other companies which have reported at least 5 to 7% growth on a 2-year CAGR basis. Internal products, they're doing well. Navratna grew by about 19%. Pain management portfolio grew by about 39%. Healthcare grew 28%. That is something which is a positive, given Pancharisht was a problem for them going forward earlier. And Kesh King 7-in-1 oils, all those products internally are doing well. They are gaining some market share in Fair and Handsome as well as the face wash too. So the stock trades at a discount to the sector. Let's see what happens. But in comparison with Dabur's results, the weakness continues, which is why we're seeing the stock which is lower.
Okay, thanks so much for that, Mangalam. Well, we'll slip into a short break. You come back, we'll shift focus to the commodities corner. Stay with us.
Welcome back. Gati is on a tear, so it's moved up close to about 3.5% today. It's rallied, 12% in a span of 3 working days. And in the month of July, it's seen a 43% up move. So I guess the street is awaiting for unlocking a value, for some stake to change hand. There were reports that TVS Logistics is looking to buy out the promoter's stake. There was news about a CFO resignation, but that doesn't seem to have impacted the stock today. Manisha Gupta joins in to talk about all that's happening in the commodity and the currency space. Manisha, what's on your radar?
Metals really, Rima, because that has been a sector which hasn't ended well for the month of July and has begun on a weaker note for August as well. So almost everything that you're looking at, beginning right from zinc, which declined 12% for the month of July, we have yet again started this month on a weaker note. While there have been concerns, of course, about the US and China trade war, with more rhetoric coming in on that one, it also has to do with the Chinese economic data itself. If you look at the latest factory data that we have been talking about, has been at the slowest pace in last 8 months, and that doesn't augur well for many of those metal prices there. To talk more about that and the strategies therein, we are now joined by Dharmesh Bhatia. Dharmesh, hi. The metal sector really has had it quite strong for the last couple of months. We have registered negative gains onto this one. We've started August on a weaker note as well. Anything that you see worth buying, or do you see more pressure continuing?
Yeah, hi Manisha. Regarding the base metal, definitely the month of June, July was very volatile. The June was rallying and the July completely showed a negative return. But August, yes, the market is flat. The main reason is INR. INR is a little bit appreciated, and I'm expecting it will appreciate further. But if you have noticed, the main volatility is just because of the rupee, the dollar volatility. The dollar is bouncing back and trying to breach the 95 level mark. So if dollar continues to rally, then you can see the bullion, the base metal showing further weakness. But for intraday perspective, I can expect that market should show some kind of a bounce back, especially copper. You can expect around 432, 433. Maybe it can jump back to 440 also. But again, it will be a bull trap for the coming weeks. The trade war is still intact. China is trying its level best to convince the U.S. market and the U.S. regional market to show some kind of a substantial evidence that market will show some kind of firmness. But as of now, there is nothing related to consolidating in the market. So short-term market can bounce back, but for longer run, completely depend on dollar. If the dollar starts weakening again, then you can expect the bullion, the base metal to rally, or else you can see the continued downfall and the negative return in base metal and bullion back.
Oh, well, absolutely. That's at least how we have begun the month of August with. But also let's talk about the crude oil prices, because that has been under pressure too. We've started August on a weaker note for that one as well. The supplies have been increasing right from US to Russia to OPEC and Saudi Arabia. And the demand, of course, seems like a bit of a concern right now. With near 1% of a decline in crude oil prices, how would you want to begin your August with?
Well, for short term, yes, definitely. I think so. The energy pack will show some kind of firmness. It was showing volatility. It jumped to almost WTI. I'm talking about like it went to 71, 72 again, bouncing back to 80, 68 level mark. It's very jittering, it's volatile. The Indian market, you can expect the rupee to appreciate for an intraday or maybe day or so prospectively, then you can see some kind of firmness and creating a base. But technically, the market should bounce back. There is, even though the energy supply is at a lifetime high, or maybe you can say a positional high, but the price is still intact and trading at a higher level. So you can expect any geopolitical tension arising, you can see the market rallying from here to towards $80 mark also. Like currently, there is no as such, you can say hurricane season, which is June, July, August, but there is no hurricane supporting the price. But then some winter demand would arise in October, November, and if you have noticed, all 7-month contracts are trading in contango.
Sure.
So you can expect short-term the market to go up.
Okay, all right. Thanks so much for that, Dharmesh, as well as Manisha. Well, keep an eye out on the markets, but also keep an eye out on the Hang Seng. The intraday chart should come up for you. At one point of time, that market was holding rather steady. Now, in fact, it's moved lower. It's down close to around 270 points. So that's getting a little jittery on that front as well. Keep an eye out on that market. We'll wrap up on the show. You stay with us. Business Lunch comes up next.